Bismillahirrahmanirrahim. Assalamualaikum and hope you are having a good day, sir. We are from KMB1 Group 2 and for today's video, we'll be presenting on one of the PN17 companies that we have chosen, which is the Sapura Energy Berhad. This group consists of 5 members that are very hardworking and keen on helping each other into finishing this report. We have Atika, Aisha, Fatin Sakina, Ra'ain Balkis, and also the last one is Siti Nur Sumaya. Here is the content for this video. We will first start with the background of Sapura Energy Berhad and then moving on to the reason why the company became PN17, continuing with evaluating and analysis for its financial performances, and for the last part is the conclusion.
My name is Siti Aisha binti Abdul Rahman. My metric number is 11909696. I will present the introduction, the background of the Sapura Energy Berhad. Sapura Energy Berhad, or also formerly known as Sapura Kencana Petroleum Berhad, is a world-leading integrated oil and gas company which offers products and services related to the oil and gas industry. The group of companies has global operating activities over 20 countries all around the world, including the United States of America, Mexico, United Kingdom, Australia, New Zealand, China, Taiwan, Middle East, and Southeast Asia. It was founded in 2011, which was born out of a merger between Sapura Petroleum and Kencana Petroleum based in Kuala Lumpur, Malaysia, at the peak of an oil price cycle. In May 2012, Sapura Energy Berhad was listed in Bursa Malaysia with a reference price of RM2.30 per share, and through the merger, it was expected to make a market value of 11.85 billion ringgit, and it would rank among Malaysia's top 30 listed company upon the listing. It was listed with approximately 40% equity interest by Permodalan Nasional Berhad (PNB), the government-linked invested company. Next, I will briefly present about Sapura Energy Berhad corporate governance. Just like any other public listed company, Sapura Energy Berhad also has to follow Malaysian Code on Corporate Governance of Bursa Malaysia Listing Company to establish guidelines and practices that regulate how the company operates and how it aligns with the interests of its stakeholders. Sapura Energy Berhad is headed by a board which is responsible for the company's leadership. The board is assisted by 2 governance committees, which are the Board Audit and Risk Committee and the Board Nomination and Remuneration Committee. The board is chaired by an independent non-executive director, which is Tan Sri Dato' Amar Dr. Hamid bin Bugo, is taking a leadership position and his interaction with the board. And lastly, the role of the chairman and the managing director of the group are held by 2 different persons, which are Tan Sri Dato' Amar Dr. Hamid bin Bugo and Datuk Syahriman bin Shamsuddin respectively. Next, for the financial performance history, in early 2014, following the purchase of the Malaysian asset of New Free International Holdings Incorporation and the reoperation of Seadrill Limited, Sapura Energy's market capitalization increased from the merger valuation of RM11.85 billion to RM28 billion, making Sapura Energy as the world's second oil and gas service provider. However, with the unexpected drop in oil prices in mid-2014, the situation changed. Crude oil price had been steady with mostly above $100 per barrel from 2011 to the first half of 2014, but plunged in the second half of 2014 due to slowing demand plus a significant increase in supply from the United States. In fiscal year 2016, the company faced the first loss since the merger, which is RM791.4 million. However, Tan Sri Shahril, who was the Chief Executive Officer (CEO) at the time, still received RM83.4 million for remuneration. Moreover, due to the impact of unforeseen economic circumstances, such as the demand side based on macroeconomic contraction brought on by lower demand for crude oil during the COVID-19 lockdown. Since then, it has been negatively impacted by significant provision and high debt financing. With the financial difficulties and the debt issue since 2014 added with external factor issues like changes of demand or supply in the oil and gas market, along with the unpredictable geopolitical issue, Sapura Energy Berhad should pay more attention to their finance and implement cost-cutting measures in order to boost their competitive advantage and regain public trust.
My name is Noatika binti Azizul Shah, matrix number 119074. So I'll be presenting on the reasons for why Sapura Berhad being PN17. So what is PN17? PN17 is where firms in Malaysia that are in financial difficulties are designated as practice note number 17 or PN17 companies, which are protected by Section 276 of the Company Act 1965 and are monitored by the regulatory authority to resolve financial distress and anticipate insolvency. Financial difficulties here means financial distress in corporate financing where companies unable to meet their financial obligation due to the fall in profitability that may influence company cash flow. So, Sapura Energy has been labelled as an impacted listed issuer under PN17 since its shareholder equity position of 85 million ringgit as of January 31st, 2022 was less than 50% of its 10.9 billion ringgit of share capital. In this situation, it has satisfied the conditions set up in paragraph 2.1 subsection E of practice note number 70 of Bursa Securities main market listing requirement. This paragraph mentions that the auditor emphasized the listed issuer's ability to continue as a going concern in the latest audited financial statement, and the shareholders' equity of the issuer is 50% or less of the issue or paid up capital. There could be many reasons for the changes in shareholder equity to be decreased. Firstly, accumulated losses over time. This happened during pandemic COVID-19 where Sapura Energy has accumulated millions of ringgit Malaysia in contract costs claimed by clients despite of the intensified operation and project execution delays that has created a negative cash flow to them. Second, huge dividend payout. Sapura Energy has encumbered with additional debt by bank borrowings for cash payouts to benefit the merger entity shareholders by rewarding them with huge dividend payouts. Third reason is an enormous debt to cover the losses. Sapura Energy Berhad incurred further debt through a series of major acquisitions including Seadrill's rig operation and New Face Malaysian Oil Holdings. This is because they want to loosen up the losses they have incurred in the previous year through the acquisition.
My name is Nurfatin Sakinah binti Muhammad with metric number 11900706, and I will be evaluating and explaining on Sapura's financial performance from the year 2018 until 2021. For financial year 2018, Sapura Energy Berhad experiences losses for the year ended amounting to RM2.4 billion. The main reason for the loss is due to high cost of impairments and lower revenue recognized during the period. So during the year, Sapura made provisions for impairments for RM2.1 billion ringgit, mainly for its PPE. And the revenue for the year also declined by 34.2% from previous year, which Sapura only managed to gain 5.8 billion ringgit Malaysia. For financial year 2019, so for 2019, Sapura managed to twist their fortune and gain profit for RM500 million. The reason behind the profit is due to the huge gain on disposal of a stake in its upstream assets. For the first time in a few years, Sapura declared a dividend at 0.5 cent per share to its shareholders. Other than that, they also managed to win new contract of RM9.3 billion, and this enables them to reduce its net gearing to a healthy 0.6. Moving on, let's look at Sapura's performance for year 2020. After generating some profit during the previous year, Sapura Energy, however, gained losses during the financial year 2020. They recognized revenue of RM6.4 billion for the year and made provisions for impairments of RM3.3 billion on goodwill and property, plant and equipment, which resulted in their loss after tax of RM4.56 billion for the full year ended 2020. Other than that, Tan Sri Shahriar Samsudin, which is the founder and the CEO of Sapura Energy, announced that management team of the company will cut off 15% of their salaries in order to mitigate with the impact of COVID-19 and drop in oil prices. Lastly, for the financial year ended 2021, Sapura Energy Berhad recognized losses of RM160 million ringgit. The company managed to gain revenue amounting to 5.3 billion. However, due to the high cost of sales and other expenses, they suffered loss again for the year. The company also encountered another news that the founder and CEO of Sapura, which is Tan Sri Shahriar Samsudin, is resigning from his position due to reaching the retirement age of 60 years old. The board then appointed Datuk Muhammad Anwar Taib as the new CEO.
My name is Nurani Balkis binti Syukuran Saanuddin. My metric number is 190743. Moving on to the financial analysis. We use the financial ratio analysis to analyze the impact of financial and compare the business financial conditions between 2018 until 2021 based on their annual report. There are 3 groups of financial reports that will be discussed, which are liquidity ratios, efficiency or activity ratios, and profitability ratios. First one is liquidity ratios. Liquidity ratios is being used to measure the company's ability to repay both short-term and long-term obligations. It is a ratio to evaluate the company's liquidity assets used in paying its debt without raising the external capital. There are 3 ratios in the liquidity ratios that will be discussed, namely the current ratio, acid test ratio, and net working capital. Now, we will look on the current ratio. Current ratio signifies the ability of the company to pay its short-term obligation within 1 year period with its liquided asset, that is current asset. The higher the ratio, the more beneficial it will be for the company. So the formula is the current asset divided by current liabilities. Based on the graph, in 2018, the ratio is 1.02, meaning that for every RM1 of current liabilities, it could be covered with RM1.02 of the company's current asset. This indicates that the company is able to pay off its current liabilities using their current assets, such as cash, receivables, and inventories. The company's highest current ratio is in the year of 2019, which is 1.35. Unfortunately, the ratio continues to decrease in 2020 and has reached the worst ratio, which is 0.63, and rose a little in 2021, which is 0.65. This is not good for the company because it indicates that the company could not pay their current liabilities using their current asset. Moving on to the acid test ratio. Acid test ratio is to measure the company's capacity of paying its current liability without the support from the selling of its inventory. So the formula is current asset minus inventories, and the amount will be divided by the current liabilities. So after we got the result, this is the result for the acid test ratio that have been calculated. In 2018, the result showed 0.94, an increase in the next year. Sapura Energy Berhad's highest ratio is in the year of 2019. At the same time, making only that year the company has a good ratio. This is because only by 2019, the company met its short-term obligation as they were able to pay RM1.31 for RM1 of its current liabilities after deducting inventories from their current asset. While in 2020, the result showed a significant decrease to 0.57 and increase again the following year with a slight increase of 0.58. The results show below 1.0 means that the company did not meet its short-term obligation as they were only able to pay not more than RM1 of its current liabilities after deducting inventories from their current asset. This situation is not good for the company as they need the support from its inventory to pay its short-term obligation, or else they might need additional financing resources. Net working capital. This is the last ratio for liquidity ratios that will be discussed. Net working capital measures the availability of sufficient net funds whether a company is potentially managed to stay in operation for short-term periods. A positive amount of net working capital or a positive value implies that the company is able to support its current liabilities with its current assets. So these are the formula for the net working capital: current asset minus current liabilities. So based on the result, in 2018, it shows a positive figure which is RM98,828,000 and has a significant increase in 2019, which is RM2,925,900,000. In the following year, the result showed a drastic decrease to the point of getting a negative value, which is RM negative 2,346,180,000 in 2020 and RM negative 2,289,425,000 in 2021. We will look at activity ratios. Activity ratios are also known as efficiency ratio. It is calculated to measure how well a company is utilizing its assets and resources in generating revenues for the company. There are three ratios that under activity ratio that will be discussed, namely the receivable turnover, inventory turnover, and the last one, asset turnover. The first one is receivable turnover. Receivable turnover ratio is to signify the efficiency of a company in collecting its receivable or money owed by customers. The more times they could collect debt from receivables or credit customers, the more efficient the company in managing their receivables. The formula for receivable turnover is sales divided by accounts receivable. So, based on the result, in 2018, the result shows 3.39 times. This indicates that they are able to collect debt from their receivable only 3 times during the year. Being able to collect receivables only 3 times a year is quite inefficient for a big company such as Sapura Energy Berhad. In the next year, the ratio grows a little, which is 3.73 times. In 2020, the ratio has reached a very large increase, which is 78.11 times, and it is the highest ratio between the recent 4 years. This is good for the company because it shows that the company is excellent in managing their receivables by being able to collect receivables 78 times during 2020. While in 2021, the result shows the same ratio as 2019, which is 3.73 times. Inventory turnover ratio. Inventory turnover ratio denotes how effectively the company manages its inventory. It indicates the number of times the inventory has been sold and reloaded during the accounting period. So these are the formula for inventory turnover. Cost of goods sold divided by average value of inventory. The ideal inventory turnover ratio will be between 5 to 10, meaning that the company will sell and restock inventory roughly every 1 to 2 months. So based on the result, Sapura Energy Berhad has a more than ideal inventory ratio that in each of the 4 recent years has more than 10 times inventory turnover. A comparatively high inventory turnover ratio may suggest inadequate stocking that is costing the company revenue. The result of the inventory turnover ratio depends critically on the company's cost accounting rules and is subject to variations in cost because it uses cost of sales as its numerators. So based on the graph, in 2018, the results show inventory turnover was 19.20 times and decreased in 2019, which was 11.28 times. In 2020, the ratio increased to 18.80 times and decreased again in 2021, which is 11.72 times. The next one is asset turnover ratio. This ratio implies the effectiveness of a company's ability in generating revenues from its asset. The low amount of revenue generated could indicate that Sapura Energy Berhad is not efficiently using its asset to generate revenues. The higher the amount of revenue generated from its asset, the better the company is at managing its asset to generate revenues. However, based on the result, it shows that in the recent 4 years, Sapura Energy Berhad has had an asset turnover less than 1.0 times, which implies that each RM1 of total asset of the company is capable of generating less than RM1 of sales revenue. So these are the formula: sales divided by total assets. Based on the result in 2018, the asset turnover is 0.2 times and decreased in the next year, which is 0.16. In 2020, the ratio had the highest ratio, which is 0.28, and decreased again in 2021, which is 0.24. And the last ratio is profitability ratio. Profitability ratio is calculated to measure a company's ability to generate income based on revenue, balance sheet assets, operating costs, and equity. There are 3 ratios in the profitability ratios that will be discussed, namely the profit margin, return on asset, and return on equity. Profit margin. Profit margin represents the percentage of sales that have resulted in profits. A higher profit margin implies that a business is more effective at converting sales into actual profit. So this is the formula, which is net income divided by sales. Based on the result, in 2018, the profit margin is negative 0.42%, which indicates of every RM1 of sales generated, Sapura Energy Berhad has to pay RM1.42. In 2019, the result shows the only profit value that the company gained for the recent 4 years with the profit margin of 0.04% that indicates every RM1 sales generated had a net income of RM0.04. Next, in 2020, the result shows a significant decrease where the value indicates negative 0.71, meaning that the company has to pay 1.71 ringgit for every 1 ringgit revenue generated, and it is the lowest margin in the recent 4 years. In 2021, the result also shows a negative value, which is negative 0.03. Next is return on asset. Return on asset measures the percentage of how much money a company makes from its assets. This is the formula for the return on asset, which is net income divided by total assets. Based on the result in 2018, Sapura Energy Berhad had a percentage of return on assets of negative 0.08%, which implies that for every RM1 of asset, it has to bear with RM0.0008 of net loss. In 2019, the return on asset shows a positive value, which is 0.01%, which implies that for every RM1 of ringgit of asset, it generates RM0.0001 of net income. In 2020, the result shows a significant fall, which is negative 0.20%, and rose again in 2021 with the value of negative 0.01%. The last one is return on equity. Return on equity is an indicator to show the excellence of a company in generating returns or earnings from its investment that to be received by the shareholders of the common stock of the company on their shareholdings. So this is the formula for return on equity, net income divided by total equity. In 2018, the result showed a negative value, which is negative 0.27%, which indicates that the company has to bear 0.027 loss for every RM1 of its equity. In 2019, Sapura Energy Berhad had a rate of return on equity of 0.01%, which indicates that the company managed to generate its net income as much as RM0.001 for every RM1 of its equity or investment. Next, in 2020, the result shows a significant fall in which is negative 0.63% return on equity and rose again in 2021, resulting in negative 0.02% of return on equity.
Name is Siti Norsmaya binti Muhammad Saleh, number matrix 1190745. So I will present on conclusion and recommendation. In conclusion, Sapura has been designated as an impact listed issuer under PN17 due to the equity position of Sapura Energy stockholder on January 31, 2022 was less than 50% of its share capital. Over time, losses at Sapura Energy increased and a significant amount of debt was issued to pay off the losses. So, the first recommendation is to debt restructuring. Debt restructuring can be accomplished by directly negotiating with creditors to restructure the terms of the debt payment. If a company is unable to make its scheduled debt payment, its creditor may impose debt restructuring on it. As Sapura has a huge amount of loan, Sapura can use informal debt repayment agreement. Second recommendation is to do disposal of unuseful asset. As we know, Sapura had to face a huge amount of impairment loss of asset. They should dispose of assets that could not give benefits to the business and spend less on buying new asset if it is not important. Last but not least, to lessen the CEO's salary. Too high payment of salary can also cause losses. Thus, shareholder can suggest to the board director and ask for voting to reduce the CEO salary into a reasonable range. That's all from me and our group. Thank you.